Ladies and gentlemen, welcome back to the channel. We have a volatile day of trading, to say the very least. And here in this video, I'm going to share with you all of your breaking news that you need to know. So buckle up, hit that like button, and subscribe to the channel if you have not done so already. If you guys have not checked out the link down below in the description of this video for the trading community as well, and you are interested in finding and investing in small cap companies that have, you know, things going on, catalysts that are in the AI field that are just undiscovered, check that link out down below in the description of this video. And let's get started. First and foremost, the Senate has passed Trump's big, beautiful bill. Billionaire John Calamos says he's bullish on stocks and the economy. Jerome Powell says the U.S. economy is in a pretty good position. Jerome Powell says, quote, "If we ignore tariffs, inflation is behaving as expected and as hoped." But he reiterates that the Fed expects higher readings of inflation over this summer. Powell says we're taking time. For as long as the U.S. economy is solid, it is prudent to wait things out. Jerome Powell says we went on hold when we saw the size of the tariffs. And he says we think the prudent thing to do is wait and learn more. U.S. S&P manufacturing PMI final numbers today came in at 52.9. The forecast was 52. So manufacturing actually beat to the upside today. Fed Powell says a solid majority of FOMC participants deem appropriate to cut rates again later this year. Senator Ron Johnson says he'll support the tax bill. This was a really good headline today, okay, from Powell. Powell says, quote, "Can't say whether July is too soon to consider a cut." So he's leaving the door open to a potential rate cut in July. Now let's take a look at the Fed rate monitor tool. And currently there's a 20.3% probability of a rate cut July 30th. There's almost an 80% chance of a continued pause. So the numbers really did not move around all too much today. They stayed the same, even on these comments from Powell, because it's, you know, it's going to be the data that potentially moves this, or different Fed officials that come out and say, hey, we should be cutting rates. We've had two of them, Fed Bowman and Fed Waller. But U.S. short-term interest rate futures rise after Fed Chair Powell says he can't say if July is too soon for a rate cut. This would be like the, 3-month bond, 6-month bond, short duration. Powell says we see gradual cooling in the labor market. And Jerome Powell says we're modestly restrictive at this level. He says that growth has been solid and the labor market is solid. He says we will discuss communication and scenarios in the fall. U.S. JOLTS job openings came in at 7.769 million. The forecast was 7.3 million, and the last month was 7.391 million. So you just had a rise of job openings of about 400,000. That's actually a great sign for the economy, because you don't look to, fire people if you're actually trying to hire people, right? So that's a great sign for the economy. Now, June ISM manufacturing prices, again, price index came in at 69.7. Estimate was 69.0, so that beat. New orders came in at 46.4. Estimate 47.6, so that missed. Employment came in at 45. Estimate was 47. That missed. And the prices component came in at 49 versus an estimated 48.8, so that beat. Construction spending came in at negative 0.3%. The forecast was negative 0.2%, and the previous month was negative 0.4%. So, that missed. It says here the EU toughens stance on Donald Trump's tariffs as the deadline looms. Jerome Powell commented on Trump's attack a little bit. He says, "I'm very focused on doing my job." And Senator Hoeven says the Senate is near a final vote on the Trump tax bill. Powell says 2025 is clearly an important year. There's a lot going on. And Senate Republican leader Thune says, "I believe the GOP has a deal to pass the Trump tax bill." Powell says the debt path is not sustainable and will have to be addressed sooner or later. And Jerome Powell offers no comment on whether he will stay on as governor after May 2026. Trump says that Doge will look at Musk. And Trump says he is not concerned by Musk's criticisms on the tax bill. Germany's chancellor says, I am optimistic on a US-EU trade deal, but I'm not sure it'll happen. The CNN Fear and Greed Index today is coming in at 66, which is, again, kind of in the midpoint of greed. Market momentum is neutral. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand in greed. And junk bond demand currently in fear. As I mentioned before, the AAII Investor Sentiment Survey showed bullish investors at 35.1%, neutral investors at 24.7%, and bearish investors at 40.3%. There is still a wall of worry to climb. That means stocks are still likely to continue higher. And, you know, we just hit new all-time highs 4 days ago. That's usually not when you want to fade a broader rally. Like, I think the chances are really good that we continue to move higher. I actually think the S&P could hit 700 this year on the SPY 700, 7,000 on the SPX, the actual S&P 500. Now, the percent of stocks trading above their 50-day moving average coming in at 69.78%. Dan Ives wrote on X and to his, firm today. He says, quote, after navigating tariff and geopolitical storms, now tech stocks are poised to see another 10% plus move higher in the second half of 2025, led by the AI tech winners in this golden age for the tech world. Nvidia, Meta, Microsoft, Palantir, and Tesla. Strong second half for tech ahead. Now, tomorrow at about 7 o'clock in the morning, we are going to get the ADP employment change. This is the private payroll jobs report. Last month was at 37,000. We are expecting a number around 95,000. So that is going to be the biggest catalyst for tomorrow morning. I do believe you have a couple bond auctions as well. Challenger job cuts, actually a really big catalyst as well. You had about 94,000 last month. You're expecting around 110,000. We did spike to, almost 300,000, which was very recessionary levels in February and in March. That has since come down a little bit, but not to the really low levels of 2024. So you really want to see this come down, not go up. This is planned layoffs from companies. Okay, so you do want to see that come down. Not sure if it will. If it does, that's great. If it doesn't, well, again, not the end of the world. We were just in the 300,000 range. But hopefully that does happen. Now, I do want to share this clip with you from CNBC and from ARK CEO Cathie Wood. She says, we will move from a rolling recession into a recovery.
At a record high to finish the first half, the ARK Innovation ETF trading now near a 52-week high, up nearly 24% year to date. Joining us right now, first on CNBC's ARK Invest Chief Investment Officer and CEO Cathie Wood. Good morning. To you, as we set up for the second half here, Cathie, I think there's a lot of folks who are trying to figure out have things already run, what's baked into the cake and what isn't in your mind?
Well, I think we have been climbing a wall of worry. I mean, a lot of people expected tariffs and wars and the controversy between the Fed and the president to really shake markets up. And of course, there has been some volatility. But these are the kinds of bull markets that I think are the most durable. When the market climbs through all of that controversy, it's really signaling something. And I think the things that it is signaling are interest rates probably are coming down. And I think what many people are not focused on in the inflation statistics are the housing numbers, and they get in there with a long lag. We think that the shift or the concentration towards just a very few stocks, which was a very unhealthy bull market, that is changing and the market is broadening out. And I think deregulation is is probably one of the most important things that this administration is doing to unleash animal spirits.
You know, you talked about the inflation picture and interest rates. We just had another guest on the broadcast that said the opposite, effectively. Said, look, the economy is humming. It's doing quite well. They wouldn't touch interest rates if possible, and they don't think that they will be.
Mm-hmm. Yes. Well, I think we've been pretty consistent on this idea of we've been through a rolling recession. If you look at housing, which is actually having a little bit of a relapse today, housing plummeted in 2022 when interest rates shot up, and it has not recovered. Manufacturing has not recovered. And so we do believe that they will recover as interest rates come down, deregulation takes hold, some certainty about tax cuts and so forth occur, including immediate expensing, perhaps, of capital goods, which would be very positive. So we think we'll move from a rolling recession into a recovery. But what happens early in a recovery, if you will allow me to call this that, I know many people think we never went into any kind of slump, but we have sector by sector. What typically happens when you come out of a recovery is productivity kicks in because companies have been very conservative and especially amid all of the uncertainties. So productivity kicks in and actually drives inflation down much lower than anybody anticipates. And I think that's going to happen this time as well.
Kathy, want to talk Tesla, want to talk Elon Musk. He's been making some more public comments again about the quote-unquote big, beautiful bill. He's opposed, of course. But I'm so curious just what you've been thinking as you've watched all of this play out the past couple of months, the politics of it all, the impact potentially on Tesla. He's now doubling down on Tesla, but where this all goes?
Well, I think what happened, and this could be considered a conspiracy theory, but, with Trump and Musk so close at one point, and with China, President Trump's primary focal point when it came to trade negotiations at the end of the day, Tesla's plant in Shanghai became a leverage point. So I think they've separated naturally. Now, I think it went a little overboard in terms of the drama. And I think the same is true today. I do think that Elon Musk is getting back to business, and he does want to transform transportation, continue to transform space exploration, really address some incredibly difficult health issues with Neuralink, and introduce productivity the likes we have never seen with humanoid robots. So I think at the end of the day, he'll become very focused on those very difficult problems, and this too shall pass.
Do you think that he's going to be out there effectively financing folks, financing campaigns to primary individuals who vote in favor of this bill? And if he does that, and whatever time and attention that takes, and whatever you think about the politics of that, does that impact Tesla or any of the businesses or other ventures that he's pursuing?
Well, I guess in terms of dependence on government, SpaceX, I believe, has $22 billion in government contracts, and really has catapulted the U.S. into the lead when it comes to space exploration. I don't think the president that formed the Space Force wants to change that. And in terms of transportation, of course, we've got a patchwork quilt of 50 states from a regulatory point of view that have to bless autonomous travel. We were thinking and still think that will move up to the federal level. So maybe that's in question very short term, but we think it makes sense for the United States if we want to be number one in autonomous travel. FDA is another consideration when it comes to Neuralink. I think what's happening is pretty miraculous if you've been following Neuralink. And the FDA, if anything, I think we've been most surprised by the deregulation that is taking place within healthcare and the desire of the leaders in healthcare to really either cure disease, get rid of chronic conditions. So, Elon Musk is contributing to that cause as well. So, I'm sure there's political tit for tat. That's how these things work out. But Elon Musk is working on the largest AI projects in the world, the largest projects in the world. And I don't think longer term he wants to be thrown off really transforming the world.
So let me know your thoughts on all of this down below in the comment section. Again, I will say markets have hit a couple new all-time highs recently, and it's likely that we're going to continue to see new all-time highs, that we're going to see a larger rally for markets. Hit that like button and subscribe to the channel if you have not done so already. Check out, again, that link down below in the description of this video. Come try it out. Come trade with us. We are finding these hidden AI stocks. I call them hidden because nobody really knows about them, that have massive potential, one of which is super exciting, like super exciting. I just posted an interview with the CEO in that trading community, where the CEO says once his restrictions are up, if the stock is at these prices, he is going to go out and buy the stock. He calls it a diamond in the rough, and says if you have a medium-term outlook on where the company's valuation should be, it's gonna or should see exponential repricing to the upside. And I have to say, I agree with that. It's hard not to. So check it out if you guys have not done so already. Link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.